so much for joining. I thought I'd do a quick video to introduce alternative investments because I've done a few videos already how to calculate the performance of alternative investments. So I wanted to give you an overview. Alternative investments in finance, they are all those investments that are not so-called traditional asset classes. When we look at traditional asset classes, we talk about shares, public equity securities, we talk about loans, bonds, fixed income instruments, and we talk about foreign exchange, currencies, cash. Yeah, so this is all the traditional asset classes. Alternative investments classes we structure or we can group into three areas. First one is private capital. Whenever the capital providers are private institutions, investors, organizations, and the shares are not traded on an exchange, for example. So it's not public equity, it's private equity. We talk about private capital in that sense, and there are two different areas. First one is private equity. There are organizations that invest in more stable cash flow generating companies. And then we have venture capital. It's all about startups. So here we talk about private capital and some of the vehicles underlying. Private capital can come as private equity and private debt. So there are also debt providers, private debt providers that can provide funding to some of those companies. Then the other area is all about real assets. There we talk about real estate, we talk about infrastructure, we talk about natural resources, like commodities, for example. And then nowadays also, and you can group it here under real assets or you can group it separately, we talk about digital assets, crypto, Bitcoin, and so on, because, yes, it's not really real, but it is actually with an intangible asset. And then the last one are hedge funds. Very important, why alternative investments? First, many investors, they invest in alternative investments because they have greater diversification to like the stock market, S&P 500. So to invest in those and have those positions in your portfolio will increase your diversification, decrease your risk. And because alternative investments, they're usually a bit long-term and they're illiquid, so you can't actually trade them. If you invest in real estate, you can't just say, okay, today I buy, tomorrow I sell, the day after I buy, the day after I sell. So they are more illiquid, hence higher expected return. Very important when dealing with alternative investments, they are a bit more complex. They need specialized knowledge to value cash flows and risks. Typically, as mentioned before, low correlation of returns with some of those traditional assets or asset classes, so they're used for diversification purposes. And then the third characteristic is they are illiquid, long investment, and usually require large capital outlays. So that's why, especially when we talk about investment funds, private equity funds or hedge funds, you as an investor, you usually invest a lot, and the funds basically consolidate different investors and then invest in certain investments. Private equity, I mentioned this broad term, or private capital, broad term for funding provided to companies. This is sourced from neither public equity nor public debt, so we talk about private capital providers. Private equity more specifically refers to investments in privately owned companies or in public companies with the intent to take them private. Yeah, venture capital, also part of private capital, but venture capital is basically ownership used for non-public companies, and especially in the early life cycle or startup phase. Real estate, I think it's clear when we talk about real estate, very important, residential versus commercial real estate. Infrastructure is a special type of real assets. that involves land, buildings, other long-lived assets that are intended for public use, like bridges, airports, schools, and so on. So there we talk about infrastructure assets that are developed or used by the government. Natural resources, I think, is clear. Minerals, energy, natural resource deposits, and so on become more and more important due to ESG and climate considerations. And then the last part, as mentioned, hedge funds. Hedge funds are private investment vehicles that may invest in public equities or publicly traded fixed income assets, private capital or real assets, so they can invest in a variety of investments, but they are distinguished by their investment approach rather than by the investments themselves. So they make use of leverage, derivatives, short selling, and different investment strategies. So here hedge fund is not necessarily different to what we learned before with other alternative investments or traditional assets because they invest in those as well, but it's more how they approach the investment. Yeah. I hope you found this useful. Thanks so much for listening, and I see you in another video. Bye bye.